Hey all, welcome to ShareTreck. This is Raj here. Friends, we have been looking at Bluebird's share price once in a while and not been taking anything too seriously. Frankly, I had stopped looking at Bluebird for quite a while. We just had it in our watch list and I used to check it out, but there was no excitement out there. Recently, Bluebird Bio fell significantly in a single day. Today's video is the story of why that happened and also the lessons that we as genomics shareholders can learn. So with that said, let's get started. Welcome back, friends. The story of Bluebird Bio illustrates how high expectations and super excitement can in many cases end up in a great deal of disappointment and destruction of wealth. When we look back, it's clear that the fortunes of Bluebird Bio was sealed in 2018 through a series of unfortunate events. A patient in their sickle cell therapy developed cancer, and as per the rules, Bluebird had to announce it and also investigate it. Though further investigations concluded that the sickle cell disease treatment did not cause cancer, it had already started the rumor mills floating and a whole lot of questions around the safety of gene therapy. And being a pioneer in that field, Bluebird Bio suffered a lot. Bluebird was the first of the block with approved sickle cell gene therapy when they were approved in Europe in 2019. CRISPR was nowhere close at that time. However, Bluebird Bio withdrew Zynteglo from the European market in 2021 because the price tag of $1.8 million per patient seemed to be too high for Europe. And they had probably tried to do some price engineering like they have done in the US, and maybe they did not succeed with that. I don't know what the story is behind that. But with that decision, I think Bluebird Bio sacrificed its lead in the sickle cell disease gene therapy space and allowed CRISPR Therapeutics to come in and be the close second. They were almost approved neck to neck in the United States. This put a lot of strain on Bluebird Bio's finances, and soon after, in 2020, it had to spin off all of its cancer assets into a separate company called 271 Bio. 271 reached a peak of $64 on 3rd of November 2021, shortly after its launch, only to quote at $2.61 last Friday at close. So you can see the price fall from such a high level. And likewise, peak value of Bluebird Bio was $9 billion. Now it has dropped to around $40 billion. And if you were to go with the purchase price that the private equity firm paid, I think the private equity players have struck a jackpot here. Remember, Bluebird had some cash balance and has 3 FDA-approved gene therapies of high value that are already generating revenue. For the private equity company, they get all of this for an upfront price of $30 million. So you can see how wealth got destroyed for the shareholders and how private equity can make a lot of money. The terms of the deal are that Bluebird's shareholders will receive $3 per share with the possibility of getting another $6.48 if Bluebird's, $6.48 per share if Bluebird's gene therapies reaches $600 million in sales in any 12-month period by the end of 2027. And the market action was predictable since each shareholder will get $3 and a provisional $6.48 per share. The assumption is that $3 is assured and $6.48 is a gamble. Expect Bluebird Bio to fall to $3 in the next trading day, and once it reaches $3 and aligns with the terms of the deal, then there will be a play for $6.48 and we may see some volatility. That's my prediction. As you can see in this chart, let me pull up this chart here. As you can see in this chart, revenue for Bluebird Bio, right? We have from 2013 onwards until 2022. And on this axis, you have how many billions that they have made. And actually, if you look at it, at the most, they have sold 53 million USD. And in 2023, the company made a revenue of 29.49 million. And in 2022, they had made 3.59 million. So even if you look at this jump that is coming in, even if you assume the same kind of growth on top of 53.12 million USD, it's still very difficult to visualize $600 million of sales, especially given the fact that US government is cutting a lot of costs and they are reducing any spending that they can. And remember, I had made a separate video on how sickle cell disease has a challenge getting funding, and the companies are pushing for much better funding. So in light of all those things, this 600 million of sales in any 12-month period before 2027 seems to me to be a little bit of a pipe dream. So most people are going to just go with the $3, and that's how the whole thing is going to play out, in my opinion. So that's a really big lesson out here for us. We may be enthusiastic about gene therapy, and we may sincerely believe in the potential of gene therapy. And it's a fact that going forward, the future of medicine is gene therapy. But gene therapy is not for everything. Gene therapy, you don't have gene therapy for a headache or a fever or a cough and cold. Traditional pharmacy will continue to do all those things, but anything that is related to defective genes can be corrected with gene therapy. Earlier, it used to be the managing the condition wherever possible, and where not possible, people had a low life expectancy and bad quality of life. But now with gene therapy, we can now target those diseases. And with every passing day, we have got new tools coming into gene editing and gene delivery mechanisms, and new discoveries and understanding of the genomic makeup. So things are only going to improve. So having said all of that, as retail investors, what we need to remember is that our portfolio should be balanced in terms of risk, and our portfolio should only have as much risk as our age profile allows us. And it's very important, especially for older retail investors, to remember that all their wealth can be wiped out overnight if they make a mistake in taking extra risk than they are capable of handling. So one has to be very careful, especially in cutting edge technology. For example, why only genomics? We can also talk about quantum computing, which is again a cutting edge technology. So those are all the areas where one has to be, and robotics is another area. So these are all cutting edge technologies, and they have to be monetized. So one has to be careful. So that's the lesson one can learn from here. And when you're looking at all your shares, and when we look at our watch list, just because the company costs $2 or $3 per share may tempt one to buy thousands of shares and assume that 2 or 3 cents up or down here and there might be giving some kind of a profit. That is very risky, because if it falls, it can fall suddenly. Bluebird fell 40% overnight. Nobody saw this coming. At least I didn't. So guys, I would like to hear from you. What is the lesson you have learned from this situation with Bluebird Bio? Please put it in the comment section, and I'll catch up with you again in the next video. Bye for now.